Well, welcome everyone. D-Dubs here. All right, everyone. Thanks for your time. Hey, Boyke. I'm glad to see everyone here. Now, as you know, we're going to talk about naked trading here. If you've been here before, then you probably know a little bit about how I trade and why there are no indicators on the chart. But if you're new here, I'll just go quickly. I take requests. So is there a chart that someone would like to look at right now? Is there a particular chart that someone would be interested in, say, now? If that were the case, we certainly could look at it for you and use that as an example. The euro, okay. We have 2 requests for the euro. Euro sounds pretty good. Pound, so it's 3 to 1. Ronnie wants a pound. Pound, ooh, pound's making a comeback. Let's see here. It's 3 to 2. And are we going to get a deciding vote? I think it's going to be the euro. Ooh, Kiwi, says Sanjay. Euro. Basically, this is, well, we can use this chart. Basically, what... Mariano still has his underwear on. Okay. All right. Fair enough. So the euro it is. Now, what I basically do, if I'm looking at, say, the daily chart on the euro, I'll go back and draw on these lines on the weekly chart. That's what I'll do. And so what ends up happening is I get a bunch of these lines on the chart. And you're probably asking yourself, well, why are these lines here? The reason why the lines show up is because these are places on the chart where the market has reversed over and over again. So as naked traders, what we're looking for are those spots on the chart where we've seen price go to that spot on the chart and then turn around. And we like to see touches from below and touches from above, right? So, for instance, here we have where price has been moving up. This is back in 2006. Price had been moving up, touched that zone, and then fell. Came back up again and fell. And then what happens when price breaks through here? It goes up beyond this spot and then falls. So and it found support there. So we have both support and resistance here on the weekly chart. Now, after I draw in all my weekly zones, then I'll break it down and go to my daily chart and draw in my daily zones. And then what I do is wait. I do a whole lot of waiting. You'll recall that zone that we were looking at back there from 2006 that had both support and resistance there. Look what happened here. All the way back this year in January, price has a memory. Price came back, landed after this nice fall here for a couple months, because these are weeks, right? It came all the way down here, and then it found support again at that spot. So it remembered that that's where it was. And that happens over and over again. So what I'm basically doing is waiting for that to occur again. Now, am I going to, as soon as price reaches one of these zones, am I going to assume that it's going to fall? Now, some of you who I know quite well know that we were looking for, because that's not the case. We don't just assume as soon as it hits the zone it's going to fall. But some of you who I know quite well know that we've been trading the euro and we sold it. And we sold it off this area up here. Let's look at a lower time frame chart here and see if there's nothing on the 4-hour chart. What about the 1-hour chart? Because I know people get really excited with the lower time frame charts. Actually, we have a perfect one right here. People ask all the time in these webinars. And by the way, if you haven't, I don't know if you know this, but there's more information on naked trading if you're looking for it. You can get more information from Trader's Choice FX. There's a free course at Trader's Choice FX, who's our sponsor here. So they're the ones that are sort of putting this together for FX Street. FX Street is obviously, as you guys know, probably the best Forex site there is. I really, really love FX Street. When I first started trading, FX Street was was actually one of the beacons on the internet because they've been around for so long. I don't know if you guys realize that. FX Street's been around for a long time. So let's talk about this right here. Let's talk about this zone. This is the 1.4684 zone. Now, even though it's a daily zone, I can trade it on a lower time frame chart. People ask that question all the time. They say, you know, can you trade these signals on a lower time frame chart? Of course you can. You absolutely positively can. The key, though, to trading these on the lower time frame chart is that you must trade off of an absolutely dead solid support and resistance level. Manoj is asking, is there a way of determining whether some zones are more important or potent than others? The best way that I can answer that, Manoj, which, by the way, that's a brilliant question. The best way I can answer that is that I only try and draw those zones on the chart that are really, really good. So what would be a really, really good zone? Because there are varying degrees, Manoj, and maybe we should really concentrate on this idea today, because I think it's an important one. Basically, there's a difference between what I call a major support and resistance zone on the chart and a minor support and resistance zone. There's a huge difference. And if we're looking at the 1 hour chart here, that whole daily setup that we had started with this 1 hour bar right here. And this is often the case. So this level right here, this 46.84 level, is a daily support and resistance level, as is this level down here, 45.12. But notice what happens down here. Notice how price actually twice, not once but twice, came down here and turned around. Same thing over here. Price came down here and turned around. Right about the same spot, right around the 1.4560 level, it found support. So what would we call this right here? I would call this level a minor support and resistance level. And this is an important distinction. The difference between a major support and resistance level, which is right up here at 46.84, and a minor one down here at 45.60, the difference between the two is simply the time frame that you see it on. And that's it. So if I go back to my daily chart here, I see I've got this major support and resistance zone here at 46.84. Let's make it a different color so we can go back in time and see. And this is basically getting to Manoj's question. I know it probably doesn't seem like we're there yet, but we're not. So this is 46.84. So let's go back in time. Go back. Okay. Here you go. So here are some absolutely critical levels, critical touches here on the 46.84. Right here in December 2009, and right here in what's that, October, I think. October, maybe a little bit into November on that one, where we touched this 46.84 level. So that was basically the last time we've seen price touch the 46.84 level, was 2009, and it found absolutely solid support there for weeks, right? And then it came back up and it found resistance there recently, just a few days ago, last week in fact. So it shouldn't be surprising to us that we'd see price turn around there. The key, though, is waiting for that signal, waiting for the catalyst at that level, right? That's really the key. Manoj says, do you sometimes find that, for example, if the euro is at a zone, then the other euro pairs like the euro yen or the euro pound or the euro Aussie are also at a zone? Is that a stronger signal, or all the pairs traded in isolation? Basically, Manoj, I do treat them all different. In other words, in isolation. I treat them all as independent currency pairs. However, having said that, what you've observed, I believe to be true. I'm not going to take a trade only if the euro yen, and the euro Aussie are all in an important zone. That doesn't mean that that's the only time I'll trade. Take a euro trade if all of them are lined up. However, Anik asked, do you observe zones on 1 hour chart? No, I actually usually trade the lowest time frame I'll trade. And this isn't always the case, but most of the time is the 4 hour chart. That's as low as I like to go. Boyke asked, but things have changed since 2009, so remember still valid? Well, I would only say that, yes. In my opinion, the way I trade, the reason why the euro turned around at 46.84 last week and we shorted it was because it remembered this level here. Because it remembered what it did at 46, or in 2009, in December, November, and October. For all of those times when it touched there and found support. And that's really the reason why it turned around there. I didn't expect it to turn around there. I only thought that it might turn around there once it gave me a nice big shadow, which is what it did, and that was our signal. So the big shadow chart, the big shadow is when okay, that was right here. So let's go to the 1 hour chart and break it down again. All right. So here's our 1 hour signal right here. So is there a reason for not trading the lower time frames? Asked Ronnie. For me, Ronnie, I just don't want to spend a lot of time in front of the computer. The reason why I'm a trader and I trade for a living is so that I can have free time to do other things, which, funnily enough, involves helping other traders, which is fun for me. And it's kind of an ego thing, and really, massage your ego by having people say, "Oh, thank you so much," and stuff like that. So if I traded the 15-minute charts, I'd be stuck in front of the computer for a couple of hours, and I just don't want to do that. So, although you don't have to stick yourself in front of the computer if you trade the 15-minute charts. The way I trade, I find it hard to walk away from a short-term trade. Very easily can walk away from a weekly, daily, or 4 hour chart trade because there's nothing going on, So usually, Ronnie, I just take the trade and set some alerts, and those alerts will go off on my phone if anything funny happens. And then I know that, I can actually check from the phone, as most of you can check your charts from the phone. So that's basically why I don't trade the 1 hour chart. I do sometimes, but very rarely. Michael says, I know you like to use support and resistance on line charts. How about using something like a zigzag indicator to locate swing points and, horizontal lines off of there? That's a pretty good idea, Michael. I just don't use zigzag. So that's it, I just don't use zigzag. That's a good thing. Like, some of you may find that. I don't know if you guys know what Michael's talking about here is your how do you receive alerts when you're surfing? Says Boyke. Luckily for me, I'm surfing during the Asian session. Usually not much is happening then. Not always the case, but usually. So when I draw these line charts on here, you can just, on MetaTrader, you can just move it to line chart here. If you don't have I'm sure most people have a copy of MetaTrader, but you can get for free from Trader's Choice FX if you don't have a copy, a demo account. So right here you can see what happened here is we had a bend in the road here. It's actually probably a little bit better to draw it on a 4 hour. Here we go. So what Michael is saying, I know you like to use line charts. Well, that's what we have here. We have our line chart here, and it's showing us where the zones are. So if you're ever wondering where are the zones on the chart, and it's a little bit difficult to see with candlesticks or bar charts or whatever, you can just move to line charts. And usually you can see these touches quite clearly. So there's a touch here, and there's a touch there. And this is down at 42.08. You got another touch here at 43.70. You can see where it recently turned around here was down at this zone, at the 43.70 zone. Although we don't really have any reason to take this. Signal right here. We don't have a signal here. So let's go back to the 1 hour signal. So this is how it works. We have minor zones, which are on a lower time frame chart, there's simply a support and resistance zone from a lower time frame chart, and the major zones are from a higher time frame chart, one up from where we're trading, or you know, the one that we're trading. So what you'll see happening is that the daily support and resistance levels will always be support and resistance levels for the 1 hour chart. It's just you're also going to have some additional ones like this one right here. So that's the difference between what I would call a critical support and resistance level and a not so critical one. This would be a not so critical one, this 45.60, because it didn't show up on the daily chart. So it's not that important to me. But it certainly is a zone on the 1 hour chart here. So what I'll do, so if I'm trading the lower time frame chart, like let's say I was sitting around watching the euro here, the first signal as price is coming up here, the very first signal actually, let me just make sure this is true. Yep, the very first signal would have been this one right here. And what is that signal? This is what we call a bearish big shadow. Bearish obviously just means sell signal. Big shadow means that the bar engulfed the prior bar. And what are our rules? If you guys don't have the rules, obviously send me an ebook request. It's highpipdiet, highpipdiet@gmail.com. I can give you the book. If you don't have it, you probably do. But if you don't, just let me know. And what we do here is we take a sell off of this right here, off of this signal. This is the signal, this bar right here. So it has a higher high, it has a lower low, it completely engulfs the prior bar. And if we look to the left here, it should have some room to the left. Now, there's another characteristic. So what do I mean by room to the left? I mean that most of this formation here, if we draw it out to the left, there shouldn't be many bars in the way. You can see this bar actually the wick did go into that area, but besides that little wick here that sort of made it through the zone briefly, we don't have any bars on our chart on this area. This is good. This means it has space, has room to the left. That means that this is a pretty good. Now, Manoj is getting to a good point here, and we're going to talk about that in just a second. Bob, if you want my 6 months trading result, just send me an email. I'll send you a PDF right after this. If there's any question that I don't trade for a living, absolutely send you my PDF of my trading results. So that's not a problem. Not a problem at all, Bob. Manoj is asking, does it not have to break the low in the next candle? Now, this is another rule. So let's talk about the rules here on the big shadow. First of all, we want to see a higher high, and we want to see a lower low. Okay, because it's an engulfing bar. Second, we like to see it on a zone. If it's not on a zone, it just doesn't count. Third, we like to see space to the left. What does the space to the left rule mean? What people get confused about this. It just means that we possibly have found a reversal spot on the chart. That's all that means, right? All that means is that we may have found a spot on the chart where price is reversed. Because we don't know where the reversal spots are on the chart. We just know about what they look like. And they look like this. This is what they look like. They look like an extreme level. They look like on a support and resistance level. They look like an extreme price formation where there's a lot of room to the left. Boyke says, which do you prefer, big shadows or kangaroo tails? I don't know. I mean, if you asked me that 3-4 years ago, I would have said kangaroo tails. But in the last year, I've really become a big fan of big shadows. You know, they're almost the same. Like you could take two bars, and if you add them together, you kind of get a kangaroo tail. So, you know, they're similar, but I guess I'd have to say big shadows now. Boyke, good question. Now, Manoj has another question here. Manoj says, don't we just take the trade if it breaks below the low? Michael says, are you happy to take counter trend trades? Absolutely. Absolutely happy to take counter trend trades. Yep. So this is how we would do this. We would put a sell stop right here below the low, right there. So the low of the big shadow bar right here, and that's where we stick it right there. Now, what I like to see happen is I like to see the very next bar trigger it. Now, some traders that I work with, they don't do that. They'll just put their sell stop in right here and walk away, and they won't only wait 1 hour. I like to wait one bar, whether it's 1 hour bar, 1 day, or 1 week, to see if it's going to go, right? And if it doesn't trigger on the very next bar, I usually remove my order if I'm awake. Some people actually will just let it rip. Now, if you are one of those people, then you see here it took 1 hour, didn't trigger, 2 hours, 3 hours, 4, 5th hour, it finally triggers it right here, and it starts trading lower. Our stop loss is going to go on the other side of the high here like that. And then we just kind of let it go. Now, so it did trigger it here. It came back up for a nice drawdown, right? And then it kept going. Where do we take profit? We take profit at the next zone, which is down here. You can see here's the next daily zone. Price comes down here and really spends a lot of time on this zone, right? And that would have been one profit target right there, for sure. For sure. And then we have another zone down here. That could have been another profit target right there. What I like to do is move my stop to break even after it hits the first target. Anik is asking about fundamentals. Anik, I tend to believe that what happens is fundamentals are just, humans are real. I'm a psychologist, right? So I have this bias. I have the psychology bias. We humans are really, really great at making up reasons for things after the fact. And so I just don't engage in fundamental analysis. Now, if you are interested in that, obviously, there are some absolutely brilliant fundamental traders here on FX Street, and they can help you there. But me, no. Myself, no. I'm probably as close to a technical trader as you're going to find. So I don't engage in fundamental funny mentals. I don't engage in funny mentals. So I don't. Yeah. I kind of have the belief that the chart's going to set up and tell you what's going to happen, and then maybe a news release will come out after and confirm it or something. That's kind of how I see it. Manoj, which charts do you use for daily charts? Sometimes on the chart, the GMT time will feature a big shadow, and another chart platform will not. What Manoj is talking about is very true. You will see differences. I mean, everyone's going to have a different 4-hour bar, based on your server time. Sometimes you'll have a different daily bar. Now, I don't really think that matters, because I think what that means is some of us are going to have a nice looking setup on our charts, and the others will miss out. But then, vice versa. It happens both ways, right? So I'm not a big fan of trying to make sure we all are on the same chart. I think you can trade these patterns based on any chart, It doesn't have to be, we don't all have to trade on the same chart. So it's not that important, Manoj, as I see it. My charts close, though, at 5 o'clock New York time. That's when my charts close. How many reversals? Bedros asks, Bevan Bedros, how many reversals candles do you watch? I hear you mention the kangaroo, the bearish, the belt. Are there any other patterns? We do have a lot of, I watch about 13 different patterns, although I've been working on 3 more this year as well. So I do watch several. And we will talk about different ones as we progress here on FX Street. So there are many out there, to answer your question. There are many ways to do it. There's a book coming out next week too. Boyke says, is there work called Psychomentals? Yeah. A lot of these systems are going to be in the book that comes out next year. So watch out for the Naked Forex book, guys. At the end of the year. Does the doji work on breakouts? Anik, what do you mean? Tell me what you mean. I don't know what you mean. So, like a fake out? Is that what you mean, Anik? Okay, so So here we go. So here's our daily chart here, and where would the minor zones be? Well, let's kind of look at that right here. I'll show you guys. Well, this kind of get back to Manoj's question here. See all these bars right here and how they have these wicks down in this level? That is what I would call a minor zone. Let's zoom in on this area here. So where is this? This is April, May, beginning of May. Okay. So I'm going to go to the 4-hour chart. We're on the daily chart here. See all these here. Let's zoom in on this and take a look. Okay. Here it is right here. See how we have all these bars down here? And they all kind of touching the same area? That's what I call a minor zone. So I can spot these on the chart, but to me, Manoj, these are the ones that are not as important. They are going to sometimes hold price. It's just that to me, they're not that important. Because I'm trading the daily chart, right? So I want to know where the weekly and daily support and resistance levels are. Walter, if one trades on the daily and weekly charts, how many trades do you take per average month per pair? You know, Manoj, I think since I follow like 20 pairs, how many pairs are on here? 1, 2. There's 19 pairs on here, Manoj, and with those 19 pairs, if I'm watching 3 time frames, there are plenty of charts. Of course, you're going to be sleeping through some 4-hour trades, and for me, that means I will be sleeping through the end of the European session and sort of the middle and end of the New York session. So, unfortunately, I miss out on some of those. But some of you are sleeping in the Asian session. Lucky you if you live in Europe or something, because that's probably a good session to sleep through. But for me, I get plenty. I mean, I can easily take 3 trades a week just trading those 3 time frames, 4-hour, daily, and weekly on 19 pairs. So it's pretty easy. Anik is asking about the risk to reward ratio. Anik, I can happily give you a free book on that. But essentially, the risk to reward ratio, I think, is something that a lot of traders focus on, and I don't focus on it in isolation because I know that it's related to other things as well. So to answer your question, it's nice to have a really fat risk to reward ratio, but I don't have a problem if I don't have a really nice one. Uncle Bob said to Michael that reading one book will not turn you into a good trader or millionaire overnight. Be patient. I think Uncle Bob's onto something there. If I had to say one thing, if everyone here asked me, the question came up, is there one thing I can do to become a really good trader? You know what I would say? I would say do this. If you really want to get to that point where your trading is doing really well, this is what I would do. I would do this. I would set up my charts like this. You can do it on Forex Tester or whatever, but you can do it on a demo account. And I would hit the F12 key like this, and I'd wait for my trades. And I'd record my trades, and I'd do thousands of trades. And this is what I do whenever I have a new, like this year, 3 new systems. This is what you do. You just test it like this. And you wait for price to get to a zone, print a good pattern that you like but that's actually a big shadow, but it's a with the move, it's a sell and not a reversal, so I'm not gonna. And then you just record it. That's it. Michael says amateurs go for home runs, but pros go for singles, reward and risk. I mean, there's different ways to do it, right? I mean, there's not only one way to make money at this, guys. As you know, there are lots of people here on FX Street that'll show you some really cool things. And it's not, I'm not the preacher of the naked gospel. You know what I mean? Like, there are many, many ways to do this. And I just think that the stuff that I talk about is easy. not easy, but simple. It doesn't mean it's easy. It just means it's simple. That's all. So it's not complicated. There aren't a lot of things going on. Now look at this right here. What do we have right here? Yeah, Manoj is right. If you have a high risk to reward, or if you're not worried about risk to reward, that's okay if you have a high win-loss ratio, a high win ratio, right? So what Manoj is saying is absolutely true, and that's how I view it. Because there's a whole formula involved, right? You guys understand that, there's a big formula involved with calculating your expectancy. Are you going to make money on a system? So if your win, your risk to reward ratio, if you're risking 3 to gain 1, that's a bit rough. But if you're risking 3 to gain 1 and your hit rate is like 95%, that's a winning system. So it really sort of depends on what your hit rate is, right? All of that, it's all interacting. How much you risk, what your hit rate is, in other words, your win ratio, and then what you're risking and what you're looking to gain. So here we go, guys. We have this is where price broke through this level. This is on the 4-hour chart, but we have these daily and weekly zones on here. So it broke through the chart, came down here, pretty nice bullish big shadow here. So what do? We put a buy stop above it, and this is what I would recommend. If someone wants to really accelerate their trading, this is the way to go, right here. This is it. This is the secret. If they're not on a support and resistance zone, I don't take it, Boyke. You need to have a couple of things working for you in my estimation. The way I trade, if I'm assuming that price is going to reverse someplace, then it better have reversed in the past. And if I'm assuming it's going to reverse at someplace, then it better give me a really nice price pattern like this big shadow right here. This is brilliant. Why? It fits all our rules. It's got a lower low and a higher high. It's on a zone. The close of the big shadow is up near the high. And it's right on our zone. Price had been moving up, came down and dipped down here and just touched the zone. Right on the zone it printed this pattern. So I really like it. I really like it. Bedros has a question here. Boyke, the only book I know that I can recommend is the one that I'm writing with my broker. No, but there are some great books out there. Let me think. The one, The Trading Game, right? The Trading Game by Jones. That's really good. How long have I been trading for? Anik asks. Anik, I've been trading since when I started trading Forex. We had to go into an office in Los Angeles and watch we had charts on the screen. So this is about 11 years ago, and we went to the office, we watched the charts on the screen, and then whenever we wanted to take a trade, we would go to the cage. There's a lady in what they call the cage. She would call Hong Kong and quote and we would say buy euro or whatever. She'd call Hong Kong, and she would give us immediately the quote from Hong Kong, and that's how we traded. And the spread was there was like a 10-pip spread or something like that on the euro. It was crazy. Yeah. So that's how we did it. But really, really good trading book is The Trading Game. I would say that one's pretty good. The other one that I recommend is the classic Market Wizards book and the new Market Wizards. I reread those every year. I consider those classics. A lot of information in those books. But The Trading Game was pretty good by Jones. I'm sure a lot of you have heard that one too. The psychology books I like. The other one I really liked, guys, was the one written by that dancer. Have you heard that book? It's a stock book, but the one called How I Made $2 Million in the Stock Market by Nicholas Darvas. That was a really good one too. I really like that one. And they release it every couple of years when there's a bull market. But getting back to our trade here, we have a bullish big shadow. So this is what I do. I buy stops right here, my stop loss down here. Now I'm going to try and take profit right around here, okay, just below the zone. Why? Because, well, these bars got close to the zone but didn't get there, and this one sort of topped out there too. So I want to make sure that I get cashed out up here. So I might put my take profit right there. Let's see what happens. I'm going to hit the F12 key and see if we're triggered. We are. We're in. So we're in this trade. This very next bar did trigger our big shadow here. So we're in. Let's see what happens next. Okay, looking good so far. Still in a drawdown, right? Ah, there we go. Now we're up. Now we're up how many pips? We are up about 45 pips on the 4-hour chart. That's pretty good. Now, here we go. Let's see. Ooh, come on. Oh, bad news. You see what happened? It made its way up to the minor zone right here, where these bar lows are right here, and where these bars topped out. That's where it made it to, and it turned around. I was kind of worried about that, but we're still in the trade, so we're not going to dump it. We're going to stay with it right now. Okay, let's see what happens here. I'd probably seriously think about dumping the trade right here at this stage, but it is still on the zone as we've drawn it on the chart. So let's see what happens next. I'll give it one more bar, and the next bar better be an up bar. If it's not an up bar, I'm going to dump it. Okay, all right. Well, I said it's got to be an up bar, and it is an up bar, so let's see what happens next. Okay. All right. Ooh, here we go. Ooh, we're really close. Came within a few pips of our target. At this stage, if I saw this bar print, let's see, when did this print? I would have seen this bar print because it would have been in the evening. This is a European session bar. At this stage, let's say we move our stop loss to break even. So let's do that. So we're not going to have any more risk on this trade. So our stop's at break even. Let's see if we can make the extra. How many pips does it need to go? Only another 37 pips to cash us out here. Come on, you can do it. Getting really close. Ah, there we go. Maybe it doesn't. Maybe it doesn't here. The high 57. Yeah, maybe it doesn't with the spread. So maybe we don't get. So we got to wait again. Oh, come on. Oh no. Here we go. It's going to hit it right here. Next bar. Come on. There it is. High 58. Still 2 pip spread maybe. Okay. There you go. So we're cashed out. So this is how I test, guys. I actually use Forex Tester, but you don't have to do that. You can use this. And my point is, and the reason why I went through this exercise is, this is how you gain experience, right? I don't want anyone to take my word for it that the big shadow works. What I would like you to do is do this for yourself. Do it 50 times and record your results. Get a spreadsheet. Get it going. If you get your spreadsheet set up, people have been talking about risk management here. If you do this, I can send you a spreadsheet that will help you figure out how good your trading is, Get all these trades recorded, and that's how it works. Now, the question here is, so Michael says he read a letter by Steve Nissen saying that he no longer trades hammers on the break. He now trades it on the pullback. Yeah, well, essentially this was sort of what this was, right? It was a pullback and a big shadow. And it was, let's see our risk reward. So for all of you interested, 117 pips of risk, and it was 139 pips of reward. Okay, I consider that absolutely fine. In fact, we've had discussions at other places here about big shadows, and some other people have tended to agree with me that in their testing they found that the bigger the bar, in other words, the wider the stop, actually some of those signals are better. So if you get little tiny bars like this one down here and say that you were going to buy off of here, I'm not saying that I would have, but let's say you were looking to buy here, you have a really tight stop loss. Sometimes those don't work out with a high percentage win rate that the big bars do, which is very interesting, I find. Very interesting. Because it means that those traders that are really into the reward to risk might take this trade and wouldn't take this trade, you know what I mean? And so it's a little bit tricky. So I would encourage you to test. If there's one secret out there and I see it all the time, those traders that make money consistently, they're the ones that have put the time in. I mean, that's it. That's the difference. Yeah. That's the difference. So it did make it up to the next zone here. What you can do is you can move your stop loss to break even and take partial profit here, partial profit there. So in the end, it did actually make it up to the next zone, which is interesting. and then it printed another big shadow up there. But I would say this signal right here, I would say that's not a signal. Even though it is a big shadow, technically, it's actually on the zone, and I want to see it sort of in the zone or right next to the zone. I don't want to see it on. That sort of looks like it's found support there, so I wouldn't have been interested in that signal right there, even though it really did go, didn't it? Why did one candle turn blue? Oh, Boyke, that's just what happens when it's the open and the close is the same on my pattern, on my chart. That's because the line is blue, see? Because the line is blue, it means that the those that have the same open and close are blue. That's all. Uncle Bob's asking about expert advisors. Actually, they interviewed me in the Wall Street Journal about expert advisors. I don't like to talk about them. I do think that they're possible to use them, and I do use them, but I think it's easier for people to learn how to trade, like just doing stuff like this, like trading big shadows. So if you're interested, Uncle Bob, there was an article in the Wall Street Journal a couple of weeks ago now, maybe 3 weeks ago, and I talked about those. But even though I do trade them, I don't like to talk about them. I know, people, they have a bad name. People think that they're dodgy. And so I just like to talk about discretionary trading systems, really. Yeah. Do I use Fabo? Is that like a laundry detergent? I don't know what that is. What's Fabo? What about big shadow candle? Fibba. Oh, fibs. Right. Fibonacci. Maybe we can talk about that sometime. Let's talk about Fibonacci at the there's a big webinar in the second session. I think we'll do that. Maybe in the second session we'll talk about some advanced stuff. There are ways of using Fibonacci. I think there's a webinar next week, folks, a big one. So it's like 3 hours or something like that. And if you want, we can look at Fibonacci there. Boyke says waiting for waves assists in patience. I agree. People think that surfing is a real, action-packed sport, but actually a lot of what you do as a surfer is you sit around and you wait. And kind of like trading for me, I'd sit around and wait a lot. What about the big shadow at the candle at 9th of November? That is a losing trade. Michael says if you need someone to proof or read your book, let me know. Oh, that's funny. I've got my girlfriend did that for me last night. Thank you, Michael. It's very kind of you. What about the big shadow in November? Is that a daily trade? Which one are you talking about? 9th of November. Let's go back. Must be on the 4-hour chart since that's what we're looking at here. 9th of November. 9th of November. 9th of November. 4-hour chart says Bedros. Okay. So, where is it? 9th of November. Let's go. Let's see here. June. Okay, so it must have been last year's 9th of November. Oh, I want to see it now. I don't make any, it's not 100%, right? The big shadow is not a 100% deal. Is the time of the day, Minaj, sorry, I saw that before. Yeah. Minaj, is the time of day important when it hits a zone? Are we more likely to get reversals at certain time of the day? Minaj, this is what I had to say about that. That's a great question, too. I think that 9th of November. 9th of November. Oh, right here. You're talking about this one. It's got to be this one right here. Yep, that's a big loser. Now, the only thing I'd say about that one is there's one other characteristic that I probably didn't mention, and that's my fault, about the big shadow. One thing that we like to see is that we like to see the big shadow have the greatest range we've seen in some time. So the range in this bar is pretty good. It's 92 pips. And so that would probably qualify. I'm just checking this one. I'm just curious. What's this range on this one? Yeah, about 82, 83 pips. So yeah, no, that's a valid one. The only thing here is you could have made the argument that, well, it doesn't have a lot of space here because, you got your big shadow bar here, engulfs the prior bar, but then this bar is kind of in the way. You could say that, right? Didn't stick out. It does trigger on the next bar, and then it comes down and it stops you out a couple bars later. That's just a loser. The only thing you could say about this is it would be nice if it had a really wide range. Remember our big shadow example down here? This bar right here had the greatest range we've seen in some time. That was a 113 pip bar, and you'd have to go back to maybe this bar to see 113 pips. Yeah, in fact, it would be all the way back here. So how many 4-hour bars is that? That's 31 4-hour bars. That's the longest 4-hour bar we've seen in 31 bars. So the idea, no sound? Can you hear me okay? Is there sound right now? Should be sound. Okay. All right. Bedros lost sound. Relog in. Okay. So I just wanted to point out here that the other thing that I forgot to mention about the big shadow, and this is all in the book here. If you don't have the book, let me know. You want to see a range, right? You want to see a wide range. And 113 pip range here. The other bar that comes closest to that would be the one back here, right? So you'll have to log in again, Bedros. Yep. Okay. So right here, this is the loser. Yep. It's reasonable to take this trade. It's not that bad of a setup. It closes up high. The only thing is that it doesn't have a whole lot of space, and it would be nice if it had a really big range, right? The best big shadows that I know of have huge range. Huge, like the one that I took back here. That's kind of the reason why I took it, because I thought, usually when you see a bar like this is great. Now, this is a really nice setup right here. That's a big shadow. Uncle Bob, Walter, what is your advice for new traders? It seems like everyone is trying to become a billionaire in Forex trading, but end up blowing up their accounts. What is your recommended return per year? Well, I think when people start concentrating on money goals, Uncle Bob, that's when things go awry. I think it's easier as a trader to focus in on just getting the trade right. Just getting the trade right. Are big shadows better with tails or just small ones? It doesn't really matter, Michael. The important thing to me is, in other words, so Michael's kind of talking about, see, this big shadow here doesn't really have much of a tail here. I think this is what he means. And then this one over here, I mean, the tail's a little bit more. It's not really that important. I don't take the stop loss to break even until, Manoj, I hit the first profit target or get really close to the first profit target. So those of you that were watching on the Euro pound, that's what happened. Here, I'm going to show you another big shadow here, guys. This is a real live trade that we really took, right? Everyone should see the Euro pound. Okay, guys. Yeah, the email is highpipdiet@gmail.com, okay? highpipdiet@gmail.com. So I just want to, this is going to be the last thing, folks. I got to go, right? We're at the end of the line here. Hopefully we'll see you next week. Basically, this is a bearish big shadow on a daily zone. This was last week's trade. This was the Euro pound. So our sell stop goes right here at 88.79. Our stop loss goes up here at 89.76. Now, this right here, the profit target I had on this one was 88.23. So 88.23 is the profit target. Okay? Guess what happened on Friday? Friday's bar did not cash out. It got really close. So on Friday, it went as low as 88.27. So even though the trade was in profit here, it triggered on the very next day, right? The bearish big shadow triggered on the very next day. It started going, and that was fine. And the next day, it kind of retraced a bit, and then it came back down. But it didn't cash out the profit target at 88.25. See, the low here was 88.27. So with the spread, you missed out on that one. So what did I do? First thing in the morning, when this week started trading, because when I sleep, the market kind of closes when I sleep. So first thing I did this morning was I moved my stop loss to break even though I hadn't achieved my target. And then of course, during the agent session, the first couple hours today, this morning, it did cash out. So now we move our stop loss to break even, right? Off here. Sorry about that, folks. So basically, now we can move our stop loss to break even and we can let it rip. That's it, right? We're off to the races at this stage. This is great. So that's kind of how it works for me. If I'm really close to a profit target, just like the example we did on the backtesting thing, if I'm really close to a profit target, I don't have any problem moving my stop loss to break even. But usually I wait till it hits the first target. So now we go break even, right? So now we're at plus 5 pips on this trade, and we're hoping that it's going to go even further. So that's how I manage these trades. Where's the next stop? Where's the next target? I actually think a minor zone almost makes more sense here. You can target the major zone down here at 87.30, but there is going to be an area where, see where these bar lows are here, and these right here, and even these highs right here on these two green bars, and you can kind of see it here with this bar where it closed and this bar where it opened. There's going to be a minor zone just before this level here, around 87.50. So that may make sense. That's still 45 pips away, which is pretty far on the euro pound, right? Euro pound pips are worth 160% of the normal pips. So, 45 pips, that's like 70 pips on a normal chart, a normal pair. So at this stage, I'd probably be looking for it to make its way down to 87.55, which is where we have this minor zone here. You can certainly hang out for the daily support and resistance zone. It's just that I noticed there's kind of a minor zone around this area, so that may make sense as well. So that's basically how I manage the break even on these, just like that. If we're really, really close, within a few pips of our zone, of our first target, I'll move to break even. Otherwise, I wait for it to hit the first target, then move to break. And that's how that works. All right, guys. I wanted to thank everyone for being here. Thanks to Trader's Choice FX. Thanks to FX Street for giving us the time here. I hope to see you at I think we have a 3-hour webinar next week, right? So we're going to talk about some really cool stuff next week. We're going to go in depth. So I hope to see you there, folks. I'm pretty sure that's next week. Thanks, guys. Thanks, Vishal. Thanks, Boyke. You guys have a great trading week, okay? And stay warm. Thanks, Michael. Thanks, Uncle Bob. See you later, Rami. All right. Take care, guys. We'll see you.